It is the most undervalued sector that in anything that I can find now, and it's only a question of when. They're in outstanding speculation right now. The usage of the dollar continues to decline in the world stage. It's gone from over 80% to just 58% now, and I think within 1 or 2 years it'll be under 50% as the BRICS move forward. Less is more, and that's how I think your financial arc should be built around. It's the greatest hyped investment product in man's history. It's not how much you're going to make, it's how much you don't lose, which will eventually separate you, the winners from the losers.
Today, I'm thrilled to welcome Peter Grandich to the channel. Peter made a name for himself back in the 80s for successfully calling the historic 1987 Black Monday stock market crash. He's a Wall Street veteran and a respected voice in the financial industry ever since. Beyond his market insights, he brings a unique perspective shaped by his journey through financial highs and lows and a dedication to blending faith with finance. Peter, welcome. Thanks for joining us to share your wisdom and experience.
Oh, thank you very much for having me.
By the way, I'm your host, Noel Lorenzana. None of this is to be considered investment or financial advice. Always speak to a licensed financial advisor before making any investment decisions. Peter, earlier in the year, you said, and I quote, "Today I'm issuing the most urgent forecast of my professional career. It's no longer a question of if, but when. Within 3 to 5 years at the most, I predict America will be struggling through its worst ever economic, social, and political era. It'll make the Great Depression look like a walk in the park." With everything that's happening now, do you still feel that way?
Yeah, the way I described it coming into our election was with Harris, we would get there that much faster. With Trump's victory, we would get a slower approach to it, but still the inevitable to come. So, yeah, I would say pretty much everything stays other than a rather brief honeymoon period that will occur, not just because we enter a seasonal period now between Thanksgiving and New Year, which I've always coined the say no to bah humbug people. No one wants to hear bad news, doesn't matter how appropriate it may be. Talk to me after the New Year. And of course, after an election, there tends to be a honeymoon period through at least the inauguration. Trump is being treated by many on Wall Street, half surprisingly, as the second coming. And so I think that may forestall the inevitable by a matter of weeks or months. But yeah, nothing really has changed in the long-term direction for myself anyway.
Very interesting. Good to know. In an interview you had with the venerable David Lynn, you outlined 5 serious issues that would lead America to the next Great Depression. And those are, number 1, U.S. government debt levels are not sustainable. Number 2, an increasing retirement and aging crisis. Number 3, we're facing an all-out immigration invasion. Number 4, the challenge from BRICS. Number 5, incapable government. So with this Trump presidency, does this change your thinking on any of these?
Yeah, just number 3. The immigration invasion is clearly going to have a change on the focus on how the federal government is going to look at it. And that it will lessen some of the economic and social turmoil that it was causing. But the amount of people that have come from it and the cost occurred by it, especially on the state and local level, won't change. But that is the only one. And ironically, number 1 and number 2 and number 5, I think, are going to be actually more negative than they would have been. 1, as you and I record this, we just gone over. It's still hard for me for somebody, when I started in the dinosaur age of 1984, to talk about debt in trillions, let alone 36 trillion now that we're at. And I think Trump will do nothing to lessen that. I mean, it's nice talk all about making government more efficient and effective, but you must recall that in his last term, he went ahead and did these major tax cuts and bumped up trillions of new to the debt level on the belief, and I'm certain this will be a selling point in the new term as well, that it will lead to higher growth in America and we'll get a return with more people being more prosperous and make it all worthwhile. I don't think that's true. but we'll have to wait till that time to come. So the debt situation isn't going to improve. The retirement and aging crisis is out of control. When you have 2/3 of Americans working paycheck to paycheck, and that are many of them are approaching the retirement age, that they're just not going to live the lifestyle that we see in those financial commercials about retirement. There's not enough discretionary income that he could add to the bottom line, even if a lot of the things that he and others that have joined him say comes true, to change that much for those folks. So we will continue to have that crisis. The BRICS are just, to me, it's the biggest, it'll be the biggest miscalculation by Wall Street in the modern era. They have not recognized what is happening there, what is transpiring, and how it's moving to be a net negative for America. And the fifth is clear. I mean, anybody that thinks that the people who disliked, hated, and to some instances wished the man dead ever since he came down that escalator in 2016, if you think they've gone away or are just going to walk away from their disdain after a recovery period because they're all in shock, I suspect they're going to ground their feet into the ground more to fight him. So by and large, I haven't seen any reason to change the very, very long-term outlook that I've had. Like I said, the only thing I think the Trump victory will, I called the eye of the storm. We went through the first part of a hurricane. You get an eye, it looks like everything is good and that the worst is over. But then the second part comes, and I still think that's coming.
That's really interesting, and there's definitely a lot to unpack there. But let me ask you this. Over the weekend, someone told me that they thought BRICS was a joke, citing the lack of a formal agreement, tensions among member countries, and noting that, ironically, participants were asked to bring US dollars to the last meeting held in Kazan, Russia. How would you respond to that? Is BRICS a joke?
Well, he who laughs, laughs best. And when when you see a government, the United States, lead the seizure of assets of a particular country and then okay it with support from its other so-called allies to give the interest that that earned to the enemy of that country, it couldn't have been a better marketing piece for the formation of the BRICS. And that's, of course, what the United States led against Russia regarding the Ukraine. All I know is this: there are a bunch of countries more coming together who are forming a group or actually participating now in their trade, leaving the United States outside looking in and moving away from the monetary system and the SWIFT and all that the United States is actively participating in. It's not encouraging more trade. And now we have a new president who actually wants to install tariffs as a way of protecting his own country, which goes against those countries. Another, I think, advertisement piece for the BRIC nations. People say that right now, no one even thought they would even get to 40 countries. I really think they will have 100 or more by the time it's over. And don't lose sight of that the central banks, and I don't want to jump ahead in case it was a different type of question you want to have. The central banks have bought enormous quantities of gold and repatriated gold that the United States and England had held for them because they foresee a major change coming on the world stage. They're not buying Bitcoin as much as those who support it think they should, or whatever they claim is their latest thing. So all these things play a role. Now the swing is, all right, they had the meetings, now they got to digest what they talked about. It probably won't be till spring till we start to hear the move for the next agenda for the next fall meetings and so forth. But to say it's a joke, I think is going to come back to bite anybody that takes that to heart.
Very interesting, and I would have to agree with you there. Peter, you called the 1987 Black Monday stock market crash. It was the largest single day percentage drop in stock market history at the time. How did you know that, and what are your biggest concerns for the market right now?
I wasn't in the business 4 years. I'm trying to think. I was 28, or got 30 years old at the time. I still say this day, God led me to it because I didn't have the wherewithal, the knowledge that I have now. What I do say to this is, and been fortunate to sidestep the 2000 and the 2008 fall as well. What I would say compared to all of them, to what we face now, is there's one alarming concern that much, much higher than in any previous time. And that is the level of complacency among investors and the professional advisory community. Given all the factors we have now, tremendous higher levels of debt, a workforce in America where the bottom 50%, half of them are now using credit cards just to pay for daily needs, a whole series of other fundamentals, both political and social issues. I see the professional community, especially, where no disrespect to what your age may be, but 4 out of 10 licensed financial advisors today giving advice weren't even born when I started in 1984. And so they've been weaned on basically a one-way street. They got in a car, took driver's ed, went forward, had a couple detours, a couple bumps that didn't last long, and are back on cruise control, just merrying along, driving away, and that they always know that there's this Federal Reserve, supposedly, if anything goes wrong, I hit a button, they come and fix my car, and I get back on the road and go. We don't have that ability anymore. And so if and when the next major crisis comes, and to me, obviously, it's when, not if, we are going to have a professional force along with the typical investor. For my planning group, 7 out of 10 people still are spending more money than they make. And they come in because they've borrowed, they've mortgaged, they have car loans, they're not fixing the houses to maintain them. They're not putting money into retirement to live a lifestyle above it. And one of the things that's allowed them to do that, Noel, is an above average stock market performance for a few decades. I think it's foolish to think that that can keep continuing, and therefore, even if the market goes up, but not to the level that they've grown accustomed to, they set themselves up a problem. So that's what I think is the biggest difference now than in any other time. And in 1987, we were so much better off economically. We didn't have large debt levels. We were well more received around the world. Our military was a lot stronger on average than it is now. All the things that were positive for America are less positive now than it was in 1987.
Yeah, that's really interesting. I've been around long enough to have my stock portfolio blow up a couple times. So I
Welcome
know
to
what market crashes can do.
Yeah,
But
listen, it's an inevitable action that happens to investors. And one of the things I've learned, and one of the words of wisdoms, hopefully I could pass on to you and your listeners, is it's not how much you're going to make, it's how much you don't lose, which will eventually separate you, the winners, from the losers. People ask me, what's the difference now than when you first started? That's why my book was changed from the Wall Street whiz kid to the former Wall Street whiz kid. Because I don't think you should call yourself a whiz of anything if you can lose millions not once but twice,
hmm
as I did. I think one of the things, again, that concerns me greatly is the lack of real experience, or quite frankly, a market that has basically gone in one direction. Remember, until a couple of years ago, bond prices kept going up and interest rates went down.
right.
And that was a very easy environment to work into now. The biggest single concern I have about the stock market as you and I speak is the bump up in interest rates despite the Federal Reserve cutting interest rates.
hmm
And any substantial move to me above 4.5% on the 10-year Treasury is going to become extremely competitive. That's going to be hard to resist for institutions, and therefore with a stock market at extremely high all-time valuations or close to it, bodes trouble well. And I don't think financial advisors on average have an understanding about that, because they just grown accustomed to, well, if the market goes down, the Fed steps in, and it's a safe. It's the Fed put, which is commonly known as, and I don't think that's available anymore in the manner that it was, decades ago.
Yeah, that's really interesting. And I believe bond yields are right at around 4.4%. And it's interesting, and it makes you wonder where you can actually park your money. And in a recent video, you suggested a very compelling investment idea right now, which I think is brilliant, and that is index annuities. Can you tell us more about that?
Yeah, so the reason I took them, first of all, 20 years ago when they came out, they were a horrible product. In fact, most people that sold it because they had big commissions. You had to stay in them 10 years, so they were able to pay double digit commissions, 10, 12%. They didn't have a lot of variable ways of working. They were high cost, were coming out of them. But they've been very refined. And my view is this, and I say this as a man that's 68, if you have no hair or all gray hair, I think you have to err on the side of caution more than a younger person. And given the fact that I believe that it'd be more challenging for higher than normal returns in the stock market, if I can make a bet where I will share in the upside, limit it, and that's what an index annuity does, but limit my losses or even potentially no principal loss. I think that's very good for those of us with gray hair and no hair, at least uh, as a more conservative way to play it. And that's what that product basically offers. And what's also good about it is most of them now, a variety that offer it, you have abilities to change markets. You can move to gold or whatever the case may be and all. And so I just think getting past this say no to bah humbug period that we enter between Thanksgiving and New Year and then the inauguration, I think if there's still investors looking past a few months and looking out for years, for me, general equity investments should either be index annuities and or look at markets outside the United States that aren't highly priced as the stock market is here now. I think there's more value in some markets outside the U.S. I don't have any specific recommendations. I don't focus on that minute to minute as I used to. But that certainly, I think, is a generalization on how I would approach the equity side of my investment portfolio.
That's really good information. I appreciate you sharing those insights with us. You've previously said, and I'll quote, in these uncertain economic times, one would be wise to put together a financial Noah's Ark to protect yourself in these uncertain economic times. What key assets or strategies would you put in this financial ark right now?
Yeah, well, you just spoke of it. Like I said, I don't think general equities, especially U.S. based, are appropriate. I love the idea of the index annuities, safe than sorry. Okay, I only end up with a half a loaf. I don't starve. So if market goes up 20 and I'm capped at 7, 8, or 10%, I can live with that. But if the market goes down, and I'm an older person that don't have a lot of time to make up for it, I limit my losses or don't have any losses, I could live with that. That's the first primary one. I still think it's dicey in fixed income. I don't think people realize, and when I watch people like, I think my most favorite money manager out there that I would give up all my money if he would manage it today is a Stanley Druckenmiller. And when people like that have become very bearish about a potential credit crisis and the fact that we're just running these deficits insanely, the ability to get people to keep buying this debt and to even service our interest. The Congressional Budget Office says that we're going to be at 54 trillion in long-term debt in less than 10 years. So even if we just get to 50 trillion and we just put a 5% interest on that, we're going to have a $2.5 trillion interest expense. 2022 is the best year the government ever had for income. Our total income was around 5 trillion. Even if that increases somewhat, we're going to be looking at over half of our money just to pay the interest. Government's not going to be able to run anything close like it is now, even if all these efficiency experts now that claim that they're going to solve all these inefficiencies in government. So I would be very careful on your fixed income. And for me right now, to ride this through, I've stayed with 1 year. I am willing to take 4 to 5% in CDs or T-bills. I think the other thing that you need to look at, which was part of that, although I exited just before the top recently, is metals, and particularly bullion. Gold, which will always be treated by the financial service industry as kryptonite, is an important asset to own. And I would think that if you don't have any, buy it in the same manner as you right now have car insurance and home insurance. No one really wants their home to burn or the car to be stolen. But if it is, we want something to offset it. I think that's another product that should be in there as well. And I think the most important thing is to spend less than you make. It's just it's a class 101 in economics, but most families still that I sit with are in the opposite regard, and too much stuff. George Carlin was a comedian who did a bit that still I use to point to people about too much stuff. Your parents and grandparents, especially, and my parents and grandparents, they never needed public storage. There wasn't public storage. We lived in smaller dwellings. We had only one or two cars. We only had one or two TVs. And every medical study, psychiatric study says we're more a mess now than any other previous generation. So more stuff isn't the answer either. I think less stuff is more important. That's my motto for what's left of my natural life and my business life. It's only three words: less is more. And that's how I think your financial arc should be built around.
Less is more. That's really good advice. And actually, all your advice is really good advice. I love watching your videos,
Thank
learning
you.
from you. You're like an uncle who's tutoring me and guiding me through these uncharted waters. And nobody else in my inner circle could offer the same type of sage or sound advice. But let
Well,
me ask you this, Peter.
let me just answer that. The fact that you recognized, as I did, I learned a long time. I entered Wall Street by accident. I never had a formal training or anything of that nature. I learned a long time ago I was not going to be the smartest or near smartest, but I could identify over time people that could add and up. As I just mentioned, a couple of names. Look at Warren Buffett. Look how well he has done, and
Mm-hmm.
he's selling stocks on average, not buying. So
Right.
the fact that you're young and not getting a problem that hits the financial service industry for people that work in it, and that's hubris. We think we're so smart we don't need anybody.
Mm-hmm.
Good counsel is very, very important. I'm honored that you find me to be that, but I would suggest to anybody is to think beyond yourselves, try to identify people that look like they know what they're talking about, and be humble enough to, even if they disagree with your views, to at least understand, well, why do they see it that way? And can you still believe in what you believe in if you fully appreciate what they just said?
I appreciate that. I really do. So you mentioned gold, and with the recent pullback, I believe you had a target price for gold at over $3,000. So what do you see gold doing in 2025? And do you think a Trump presidency is good for gold or not?
So I was a big believer in gold from under 1300. In fact, in 2021, I said by the end of the year, I am going to have no equities except one, general equities, and I'm going to use physical gold as my capital appreciation product, which worked out. Now, about 6 or so weeks ago, whatever, I bailed out of those positions because I bought it for capital appreciation, and it was approaching 2,800. We've had a much needed consolidation and correction. As you and I speak, I think we're pretty close. The downside risk is 2,500. There is theoretically an argument it can go as low as 2,300, but we're in a secular cyclical bull market of the ages for gold. To be up 40% in a year, it's not it's not destined to be that as an investment product. It's really there to protect and preserve wealth, not to greatly increase the value of that wealth by its increase in price. Yet it had a tremendous move, so the correction was healthy. My feeling was, and still is, I said that when we got above 2,000, we will not see under 2,000 before we'd see above 3,000. And I think that's still very destined. We had huge central bank buying. We had expectation around the BRICS, was it? And those two things quieted. The BRICS are going to be quiet now until spring. The central banks for now are still buying, but they're not breaking the bank, so to speak, buying. And then the Trump win really gave people an air that, well, maybe things won't be as bad right now. And therefore, I don't need to own as much gold or whatever. And that's probably helped accelerate this correction and consolidation. But all the factors that drove it to where it is here will continue, in my estimate. We'll see the central banks continuing to diversify. We're going to learn more from the BRICS as we approach the next fall meeting on how advanced their systems now have been set up to trade. I think finally this next fall we'll hear them how they're going to use gold in their new unit that they plan on to trade among themselves. So I would say that there's no catalyst at the moment to drive it much higher from now and through end year, but I still think in 2025 it'll take out the highs that it made this year on its movement towards 3,000. That's at least where I think the price can get to. And people say, well, what do you think after that? My line always is, let's get there first, and then we'll take a look at it after that.
Right, most definitely. So my next question is something I'm not really proud of. I've followed the metals and mining sector for a long time, and I've lost a lot of money in mining stocks in terms of real dollars and missed opportunity cost. Is there any hope for the mining sector?
Well, you're not alone. I, uh, I would have told you 2 years ago, hey, the juniors are just a great place to be. Then I would have told you last year, hey, the junior resource stocks are a place to be. And I'm telling you now, 2025 is just set up for all the conditions that didn't exist 2 years ago are here now. We've had a huge move in the price of the underlying metals. The mining companies that actually make it, produce it, and sell it are producing huge free cash flow. They have not spent money on serious new exploration to replenish the 1 to 5 million ounces of gold a year that they produce and sell. And unless they do, they'll be out of business in 10 or 15 years. The places where they could go, they only have two choices: start looking for it themselves, which estimates of what it really costs a major to start and eventually find a gold and produce it is anywhere from $100 to $200 an ounce. Or they can go out and shop ready-made production or companies with advanced stage or projects that look like they can be, and they can buy it for as cheap as $5 to $8 an ounce to no more than $20 to $40 an ounce in the ground now. So I suspect that in 2025 we're going to see a very large increase in M&A in the metals and mining industry. Because if you want to believe the don't worry be happy crowd on Wall Street that tells us all about AI and still tells us about the electrification and all that stuff, those all need metals. And there's no ample supply of any of those metals anymore sitting with vast supplies somewheres. Same thing with copper. So as hard as it's been, I can tell you that when I did sell my metals and even my major mining shares, I have beyond any reasonable advice the amount of personal junior resource stocks that I own now. But I'm going on the basis that inevitably it is the most undervalued sector that in anything that I can find now. And it's only a question of when they have to move because of that need that I spoke about. And please God, 2025 is the year to do it. But let me put an asterisk, which probably you didn't think of and I didn't think of in my early years. This is gambling.
Mm-hmm.
Wall Street came up with a word that they don't have to ever say it's gambling. It's called speculating. But speculating and gambling is the exact same thing. And not only do you have to be financially prepared, but you have to be mentally prepared to lose part of all your capital. And most people aren't. So I tell her, listen, Peter, like you go in a casino, you walk in that casino, you lose that amount, you leave. Your life doesn't change. You don't come home and kick the dog. You don't come home and not talk to the kids. You live life still the same. And if you could do that, they're an outstanding speculation right now, gambling right now.
Yeah, no, very interesting. I've come to the same conclusion, and I'm not much of a trader in the stock market. I'm more of a buy and hold type of investor or saver.
Can I just make one point? When it comes to the juniors, that's what you shouldn't do. And let me just tell you why, because I've done that.
Mm-hmm.
7 out of 10 companies, even if I have 10 different juniors now, I'm prepared that 7 or maybe 8 of them will never find or get to the point where they found a mine or found something worthy enough to sell to somebody else for profit. And all 10 are being run by honest, hardworking people. So buying and holding for the very long term in juniors doesn't work. Unlike it might work, but senior type of companies or other type of industries. But when they work to the point where the 2 or 3 that do work more than make up for the 7 that didn't work. And so
Mm-hmm.
that's why you have to have some diversification in the junior market, because some of them are going to work and some of them are not going to work no matter how hard they try.
Yeah, definitely. I'd love to have some 10 or 20 baggers in my account in the next few years, uh, the good Lord willing. But anyway, Peter, you've raised concerns about a developing credit crisis. We touched on this earlier, but in the national debt now exceeding 36 trillion and reportedly growing by about 1 trillion every 100 days. I find it very troubling, but some argue that the government can just keep printing more money. What's your concern with the high debt levels?
Yeah, and we can become a banana republic while we do that. You know, that's what happened in the past in the 70s to countries in South America and all. And we're on that path. Listen, there's a reason, and again, I know you said there's people that blew up, BRICS and all that, but there's a reason certain countries who were once very formidable buyers of our debt, Russia, China, some others, have been very aggressive net sellers of our debt. In fact, Americans now make up more of the purchasing of the new debt than at any other time in history. There comes a point, and that's what the Druckenmillers and all are concerned, the Paul Tudor Jones, that we may have problems servicing our debt. And the moment we do, Donald Trump just happens to be an example of that back in his history.
Mm-hmm.
Banks were falling over each other to lend him money, and suddenly there was concern he got himself too leveraged, which he did, and he couldn't get credit. And that's the same possibility that the United States can face. And I'll just say to you, the first warning when we see interest rates getting cut and yet long rates going up, that's suggesting that people are concerned about that. And if we get much above 4.5 and they cut rates again, that's only going to feed the concerns of that coming credit crisis. I'll just say, as you and I speak here, on the 15th of November, the biggest single concern for stock market bulls should be the bond market and what happens with rates. Because the Fed can influence short-term rates, but the market really tells you what they think of the future based on what they're doing with long rates. And as we were just talking about inverted yield curves a year or two ago, the spread now is becoming so wide that that's actually a bigger concern. And for the first time in 22 years, from an allocation standpoint, bonds are more attractive than equities. And so if that yield keeps going up and the stock market stays heightened during this melt up, it's going to become even more challenging and leave room for the stock market to actually fall farther and further than it might otherwise if there is a flip in asset allocation.
That's really interesting. So I take it you're on board with the great melt up theory.
Yeah, you can only describe this. I mean, listen, for me personally, I'm 1,000 times happier that Trump won versus Harris. What was he my first choice that I wanted to see as president? No, to be candid. For my wife, yes. For me, not exactly. But being I only had two choices, he was the much better choice. The problem I think is that the belief since the election and all the things that are being stated, I think they're being over accepted because of how people think how bad it was before, and that this is going to be so much better than it was, and that may be true, but there's still things out there that even will be difficult, if not impossible, for Trump to overcome. And the single biggest one that we talked about is debt, and he has a history, both personally in his own business as well as the first time he was around, is to get a large levels of debt. And if I may add this, because this is important, if you brought me here to speak the truth and nothing but the truth, I wear my Catholic Christian faith on my sleeve. Some people don't think it should be in the financial world. I think it has to be, because the book that led us to believe in what we believe has more about it, finances, than it does even about hell or heaven. In that book, whether it's the Word of God or just a bunch of people that got together and put the book together, and it lasted for a couple thousand years, there's not a positive verse about debt. The teachings are all negative about debt. And debt to me is the worst four-letter word out there, far worse than any curse words that we can use. And I think that's the big problem that we face here. And while it's going to be overlooked during this period, but you and I, God willing, can speak this time next year, and we're talking about we're at 37 or 38 or even 39 trillion now. that is where the big trouble is going to come from. It's going to be a credit crisis and something that can just happen overnight. And once it happens and flips, then we become the banana republic because no one is going to take this choice, which we saw happen in the 1929 crash. We went through a deflationary period. People are not going to, governments can't stand for that, and they'll choose inflation over deflation. And that's when you'll see wholesale monetization of debt. And remember this also, the US dollar currently up because our rates are rising while other leading countries seeing them going down. The usage of the dollar continues to decline in the world stage. It's gone from over 80% to just 58% now. And I think within 1 or 2 years it'll be under 50% as the BRICS move forward. Those dollars are still in existence, Noel. I know you're a CPA. They don't go away. They may not be used by those countries, but they're still in the system. Well, what are they going to do? They're going to come back here. And that'll be very, very inflationary. That's what inflation is when too many dollars are chasing too few products. So, again, is this happening tomorrow? No. But we talked about the financial arc 3 to 5 years from now. Very, very strong possibility can happen.
It's a really scary prospect. I'm terrified of it, but there's not a whole lot you can do. So President-elect Trump has been really good for Bitcoin. And if we could talk about that for a minute, I know as well as you do, it has absolutely no intrinsic value. It has limited usefulness. And I believe you said that Bitcoin was the biggest Ponzi scheme ever. Is this just another financial mania that belongs in Charles Mackay's book? I believe it's called Extraordinary Delusions and the Madness of Crowds.
It's the greatest hyped investment product in man's history. I like to say that both Tulips and Bernie Madoff sitting in hell right now are very jealous of how it's been able to be promoted in the manner it did. It started as a very good concept, a high-flying technology stock. It is a product that has had 6 or 7 different narratives over the last few years on why you should own it. It is a product still searching for a reason to justify. I remember a few years ago, gold was going to zero. It's a relic, and you want to own it versus gold and all that other stuff. But understand that it was really pushed and became mainstream just a few years ago. Right. So you can't look at it was $1. Look how great it's been because very few people were in that. That's the same as the penny stock hypers used to do in the 80s. Went from 3 cents to $3 because a handful of people made money in it, and then they sold it to the general public. That's basically what happened with Bitcoin. So about 3 or 4 years ago, when it first ran to 60 or 70,000, we were all being told then, and let's take to who I think is the greatest promoter Ponzi schemer that will ever walk on the earth, and this is this Michael Saylor. He was out all over on financial networks saying, and it's very quotable, you can look it up, sell your stocks, sell your bonds, sell your business, sell your home, borrow if you have to, and don't put it all through cryptocurrencies, just put it in Bitcoin. Well, that's your first signal then. No one, you shouldn't do that with gold, you shouldn't do that with junior, shouldn't do that with anything, okay? So that was the first turn off and all, but he was on. Then the second thing that came along when the first rally came down, and I said, look, they got to promote it again. Too many of them own too much of it. They didn't get it off yet. Suddenly people who just a few years ago take a Larry Fink, and I like to joke, when I was a kid, we were told never trust anybody that was a Fink or maybe named Fink. But the bottom line is suddenly it went from it's the worst, disgusting thing in the world to the greatest thing since sliced bread. Oh, and by the way, my company's become the world's biggest exchange traded fund, and we're making tens of millions of dollars almost daily trading it. Now, by the way, I'm not taking my payment in Bitcoin, the profits I'm making it, but you should own Bitcoin. It's, it's the greatest thing since sliced bread and all. So Wall Street became involved in it, and then these predictions of 3 million, now it's 13 million, I think Saylor said, and even quality funds like Van Eck or somebody talked about it being worth 3 million and all these type of numbers and all. And different narratives. My joke is that it won't peak until they announce a cure cancer. At that point in time, they will run out of narratives that they could get people excited about and so forth and so on. So it's going through a melt up. And now it's had the addition of the Trump win. It's a person that's talked about cryptocurrencies and all these expectations. Never yet in the history that I've chased, and at one time I was a big authority about, and I studied a lot about different markets going back 400 or 500 years. Never has Wall Street encumbered any type of product or investment theme to where almost everybody was involved in it. And at the end of the day, the public was left holding the bag. Doesn't mean a lot of people didn't make money during all of that, and some were the public. But in the end, it never was long lasting, sustaining. And I believe that'll be the case. But how brilliant this guy is, with a very shady background, he saw another way of even promoting and getting it higher and faster. He created or was control of a company and basically turned it into the biggest engine to a Ponzi scheme. A public company that goes out and uses borrowed money to buy more of this product, thereby with a finite supplies of it, helping the price go up. That in turn creates people more excited, convince them, well, I got the perfect way to play it is through this company. People willing to lend that company more and more money so it can buy more and more of this product, and it becomes a self-fulfilling engine. But when people talk about numbers that are so astronomical higher, we used to throw people out of the brokerage business and some in jail in the 80s and 90s that did that with penny stocks. And I think it's nothing more than a very high technology stock. It may still be around 5 or 10 years from now. And, and blockchain technology is going to be around. But when it's everything and anything, and here's the key part, you cannot have a minute's worth of conversation with anybody that's in that cult behind it that will even give you a minute's worth of time to even make a comfortable counter argument to maybe why it's not the greatest thing ever. And when people are so caught up in that and not open to any thought whatsoever, that is something that I think you stay away from. And if it came that same way with gold or any junior resource stock that I owned and all, I'd be selling it. I've learned to bet against the Michael Saylors of the world, not on them. Can they make a lot of money in the interim? Absolutely. Did some people make a ton of money when tulips went from pennies to tens of thousands of dollars? Absolutely. Did some people make money when Bernie Madoff ran his Ponzi? Yeah, the people that were early did real well. But I think it's very, very dangerous now to be treated anything more than a speculation. And too many people are treating it as the end. Look, how absurd to say we're going to make it a reserve currency and that it can pay off our debt. I mean, that, first of all, how do you pay off the debt? If the price of it rises so much to be worth an ability, you're going to have to sell some of that in order to pay that debt that you own. And doesn't that become self-defeating? So I know it's on everybody's mind and it can last longer this in a melt-up kind of phase that the financial markets are in right now. But it's extremely dangerous, and I would treat it as a pure speculation and nothing more.
Yeah, no, I couldn't agree with you more. I've actually got a video recorded called Bitcoin Mania, the latest popular delusion, comparing it to Tulip Mania from the 1700s in Holland.
Oh, it's bigger than Tulip Mater and anything Bernie Madoff has done, and that's why it can last longer. But I think in the end, if we live long enough, we're going to talk about more people losing a lot of money in it than making a lot of money in it.
Yeah, it'll be interesting. It'll be really interesting. Moving on, one of your recent blog posts, you quote a Bible verse that got me thinking, and it says, "What does it profit a man to gain the whole world and lose his own soul?"
Yeah.
How do you think this applies to building wealth today while staying true to one's faith?
Well, I used to be the chairman of the Me, Myself, and I Society. And I thought money would always be the answer to whatever the issue might have been. And of course, that led to being a legend of my own mind at the time as well. So we see countless stories in today's world or anything historically, but in scripture, particularly, that when money became the main focus and lose sight of the principles for those that believe in the Christian view, clash. And the interesting thing is, some of the things we learned, one of the great sayings is, and people that don't follow or believe in the Bible hear it as misquoted. We heard this saying, oh, money's the root of all evil. No, what it actually says is the love of money is the root of all evil. God never had an issue with money, he knew it had to be used. For those of us that believe Jesus Christ was Lord and Savior, he had an entourage, and I'm sure people were using money. He wasn't turning every day into fishes, into loaves, and bread and all that. They had to have some money and all. But what he did point out is, the more we had, not only is it more difficult to stay focused on what we should, but you were called more on to do more things with it. And that always is the challenge. And so, if money was the answer to everything, very wealthy celebrities and well-known people who end up having horrible lives through drugs or other bad addictions, or worse yet, taking their own lives, it's not the cure to everything. And I just think that we need to recognize that all the money in the world, there's a great pastor that talks about it, when he's met with so many people that were near death. No one asks to see their trophies. No one asks to see their college certificates. No one asks to see their cars and all. They ask to see loved ones,
Right.
and people that were important to them and all. And that's what that scripture is all about. What good is it if you have everything, but the end result is, for those that believe, if you don't believe there's anything more after this world, I can understand you wanting to get as much as you can and all. But if you're like me and you do, and there's a potential of maybe not going to the best of places, or worst or horrible places, then what good is it? If I may, I don't know if you've ever watched it, Noel. It's been standard in my work since I saw it 15 years ago. There's a wonderful Protestant pastor named Pastor Chan, and it's called The Rope. You just got to go on YouTube, put in The Rope, Pastor Chan, Chan, and I don't want to give it away, but if today when we're done with this, Noel, you watch it, and hopefully your viewers watch it. It became a standard bearer of how to live my life, and it really answers the question you just asked. And I'll leave it at that, because people really should watch it. It's been the most single valued video that I ever saw in my life to influence me.
Oh, wow. I appreciate that. It's called The Rope.
The Rope, Rope, Pastor Chan, Chan. It's only 4.5 minutes.
Okay.
And I don't want to take it away, because the first time people see it, they write to me, oh my God, I can't believe you. I'm so glad I saw this. So hopefully you'll be the same way.
Thank you. I'll definitely check that out. My last question, Peter, if you could go back in time and give your younger self one piece of advice about anything, including faith and finances, what might that be?
Oh God, the answer would be is learn forgiveness. I was so bitter. I mean, there were a period of time when I didn't talk to my sister for several years. And a couple of years ago, I went through my latest challenge of depression, and it was very severe, life-threatening. And I came out of it with the desire that I can't hold these grudges against people or whatever that I think did me wrong. And the happiest period I've ever had in my life is the time since I made peace with my sister and the life that we have now. And she's 8 years older than I am. And I would just tell you that forgiveness is key. Almost everybody listening to this, even maybe you, is angry about somebody or something that happened in their life. Many times it's family members. There's families that don't talk at all. And it's true when you hear that the forgiveness is not so much for them, but for yourself. And the freeing of that, and that boiling up that can get you so aggravated, is a lifestyle change. And so I would just say that I would go back and tell myself, hey, idiot, don't spend so much time holding grudges. Focus on the good, be willing to forgive and move on. And I think I think it's something that can very aid almost everybody in their life.
That truly resonates me. And if I could just pry a little bit further, if you don't mind,
Sure, go right
like,
ahead.
how did you find that forgiveness within yourself? Is it
Well,
because of the medical event that you came out of?
yeah, we almost always, so let me take a step back if you may, this is important. So I started back in 2000 working with professional athletes because we felt that the guy that I started with played for the, the New York Giants, and he had a belief that athletes needed special type of advice, not just about money, but about life, and that to teach the mistakes that a lot of guys. So our whole board that we developed were former athletes, and some were still playing at the time, but had gone up to the top of the peak and then went down the other side of the hill because of you know bad judgments, money, not living their Christian life, et cetera, et cetera. And but all people that I've seen that made that turn had to hit rock bottom or come close to rock bottom. We don't make these smart lifestyle changes when everything's going good and we're on a high and all. But when we're down and almost left to no other choice, I mean, some of the greatest stories, even biblical or people we know now that talk about that they were brought to such low levels and such despair, and then they were open to it. And through even in scripture, everybody thinks, well, I wasn't a good angel. God isn't going to love me. I mean, look at some of the people we talk. Moses killed somebody. Uh, we had great saints that lusted after, and had men killed so they can be with a woman. Peter denied God 3 times. Nah, I'll be there for you. No, what happened? I don't know him. Don't know him. Never saw him in my life before. We're all sinners. We're all fall short. And instead of beating ourselves up and spending so much time on being angry at ourselves or others that we think led us there, look around at what's really, really good. Look at all the pleasantries. I make it a point now, and I speak about it openly on my X page, that when we get up in the morning, it's a grace. We have no right to believe we're deserving to be here. So let's not focus too much on the negatives. And that's hard when you own junior resource stocks, because by 9:35 you're starting to see some of the negatives. But the bottom line is, I just think it's really, really important to recognize that the cup is half full. The world wants us to think it's half empty. In fact, many people that you talk to that are bringing you down, it's because they're down, and misery loves company. And so the other thing that's important is to separate yourself from people that see the cup half empty. Don't watch the things or read the places that focus on that, and focus on all the good that's out there. I mean, just the beauty of nature. When you think about all these birds of different colors, and yet all these things they do, and they know that, we have hummingbirds where we are. Here they know just at a certain time, they know to fly off, and they fly. I mean, those things, if you really start to think about how whoever is responsible for that, what an enormous gift they gave us. That's the things I think that are important, Nolan. All I know, people want to hear, what do you think the Dow is going to do? Or is gold going to go up? And all that. But I feel if I could talk more about what you've been blessed to allow me to talk about today, will do more good to anything versus saying where I think some mining stock may be going.
I appreciate all of that, and that's one of the things about you that really resonate with me, is that you're willing to talk about finances and your faith, and I really appreciate that. Peter Grandich, it was truly an honor, a privilege, and a blessing to host you on my channel. Thank you so much. How can someone get a hold of you or follow your work?
Well, if they bought junior resource stocks and went down because of me, they don't need to get a hold of me. But other than that, I have an X page. That's where I do most of my communicating. There is a YouTube channel. There is a blog. If they want to learn more about it, just go to petergrandich.com. I would tell them that there is a book. You can read it for free online, Confessions of a Former Wall Street Whiz Kid. I share all about my life, the learning mistakes and everything like that. And you can read it right online. You don't. It's found at on my website, petergrandich.com. And hopefully this if you told me at the end, hey Pete, me personally or someone that a follower of mine, help change a life, then it's all worth taking the time to have this conversation.
Absolutely. I couldn't agree with you more. Peter, thank you so much. And thank you, the viewers, for watching. Don't forget to like and subscribe. We'll see you in another video.